Hi there, I'm Lindsay Biscaya. Welcome to Market Call. Today on the show, we have Keith Richards, President and Chief Portfolio Manager at ValueTrend Wealth Management, and he will be taking your questions on technical analysis. You can call us toll free. Here's how you can reach us, 1-855-326-6266, or you can send us an email to marketcall@bnnbloomberg.ca. Keith joins us in studio. So great to have you in. What an interesting time for the markets, particularly this week when we know that there's potential maybe for a peace deal to be reached between the U.S. and Iran. That seems to be flip-flopping the markets quite a bit this week. What do you make of, you say June's usually pretty choppy anyways.
It can be seasonally, but this is adding to the fun.
Right.
You know, before all this started happening, I used to have hair, so that's what's happening there. But I wrote a bit for the, BNN. We always do the market commentary. So I was saying it's a lot of chop, but, then along comes the peace deal, the market's up again.
Mm-hmm.
My view is that in the broader perspective, we were talking a little bit before the show, I use a risk model.
Yeah.
And the risk is still there. It doesn't mean it can't go up, though. That's the thing about risk and reward is just a trade-off, but they're always there both times. So our model, because the breadth on the market has been really lousy on the U.S. side in particular, so we're kind of somewhat cautious on the U.S. side, although interestingly, I'm actually quite bullish on Canadian stocks, TSX stocks. And I did a video the other day I do on my own, and I talked about all the sectors on the TSX.
Okay.
And they just blow away the U.S. sectors, except for the one.
Blow away in terms of risk and reward right now? Or what are they in the
formations that I'm seeing on the individual TSX sectors look far more enticing than when you look at the individual sectors on the S&P 500. And it shows up in market breadth. Like if you use a performance chart and you look at all the sectors of the S&P 500, the major cap-weighted sectors, you'll see it's only technology that's actually beating the S&P 500 because it is the S&P 500. Everything else is below the line. So it means it's a very narrow market on the U.S. side. Then you look at the TSX sectors performance chart, and you'll see there's lots of sectors that are outperforming the base index.
Why is that?
Well, it's a better distribution of companies right now that are doing some of the lifting. Like all of the lifting is being done by the tech sector in the U.S. market. Now, that can change 3 months from now, but right now it's all about AI or SpaceX now, but that's a new one. But it's been that game, and I think the TSX is going to be a better place based on the distribution of money moving and the formations I'm seeing on the TSX. So
a little more diversified too.
It is for now,
Yeah. Is there certain sectors still on the TSX or U.S. markets that you're kind of staying away from, that you feel just because of what we're seeing and how volatile things are is better to just stay away from for now?
So one of the ironic things is that we are completely out of U.S. tech, which is bad because, of course, the market's gone up. But we're kind of contrarian. We're also value people. So, but we are in and starting to buy quite enthusiastically, believe it or not, Canadian tech, because the charts look completely different. So the Canadian tech is building a base and trying to break out. And like if we look at, I don't know, we could look at this later, but if we look at, say, the XIT ETF, like it looks like it's an emerging sector, whereas the S&P tech sector looks like this. And that doesn't last forever. Like that's parabolic, that's overbought. So that's the way we're looking at things. There's a lot of stuff in the TSX that looks very enticing from a value and technical point of view.
Okay, I'm sure we'll talk about that throughout the show. We're going to take a quick break right now, though. We'll be back with Keith Richards of ValueTrend Wealth Management, taking your questions on technical analysis right after this. Here's how you can reach us. Welcome back to Market Call. Keith Richards is on the show today, taking your questions. We're going to start with an email question, this one coming in from Shelley, and it reads, "Hi, I'm wondering why WCN is performing so badly and if you think it will turn around. Analysts seem to be positive, and it's a sector that is always needed and seems to be unaffected by tech and economic downswings." Okay, so Waste Connection What are your thoughts on this company right now?
So fundamentally, I have a CFA, Craig, that works with me, and he could probably tell you why. So never ask a technical person why, because I just look at the what.
Right.
So what is going on is that it's we were in an uptrend. An uptrend is defined by higher highs and higher lows. When you break the previous low and take in a lower high, which is what happened on this chart, now you have signs of being in a downtrend. And then when it finally makes that next lower low or next lower high, you're in a downtrend. So that's what we're in. I mean, this is sometimes I'm a wonder as why I get paid to do this, right? It's so simple. But basically the trend is down until it finds a support area. So maybe if we did look at a 5-year chart, I could maybe find some old support. But there will be support points that on any chart when it's in a downtrend that it could find. Yeah, here we go. Okay. Oh, yeah, that's West Fraser.
I think we're just trying to get the right chart for you. But so you want a 5-year chart to just kind of show, what are you trying to show?
Okay, so here we go. So if we look at the old pattern, there's kind of a level of resistance here, right? And that, according to technical analysis, can become new support. So that would be, as a technical person, I would say that's probably my target. I'm not saying it will go because everything's probability and analysis, right? But the possibility anyways is maybe near 180, 190. And so it's at, 217 right now.
Yeah.
So I would say that I would not own this stock simply based on the trading pattern. It almost doesn't matter why people don't like it. If the traders don't like it, they don't like it. You don't want to own it. Don't catch a falling knife, as they say. It's sharp. So.
Okay. All right. We're going to go to the phone lines now. Brian is calling in from Ottawa with a question for Keith. Hi, Brian. What's your question?
I don't hear Brian.
Tech sector. Constellation Software, is that one of the companies that you're currently interested in now? It got hammered. It bottomed out around 2,200, has recovered up to 3,100 and seemed to stall out there and then has slipped back a bit. So I'm wondering if you like it and if you think it's going to following through to the upside. What do you see as a potential upside target? Thanks.
Okay, thanks for the question. Constellation Software, we'll take a look at the chart.
Yeah. Per my comments at the beginning of the show, I like some of the Canadian techs.
Yeah. And
this is one of them. So, went up, topped out, broke down. But here's something that happens next in technical analysis. Everything works in phases. I've written books on the subject, but basically you have kind of waves that happen in technical analysis in the markets. And right now we formed a bit of a base. You can see it stopped making lows, right? So this is, if I clear my screen, you see the lows and the highs are getting lower, and look what happened, no more lows. So that's what we call a base. And then it kind of looks like it's breaking out of that base right now. So this is actually very positive. It's a good example of some of the other tech stocks that I like. I think there's great hope. You're going to have resistance as we come up through the old highs or the old peaks. But in my opinion, it's not a bad looking chart. And I think, what I would do is leg in. I wouldn't plunge my entire allotment into it, but I would say if I wanted 5 or 6%, I'd go 2% and then wait and see if it wants to keep going up and just keep adding 2% at a time.
Got it. Okay, back to the phone lines. Tyler's calling in from Toronto with a question. Hi, Tyler. What's your question?
Keith, I want to get your opinion on the Fraser Group, WFG in Toronto, and general broader commentary about the timber section, the timber sector. It does appear to be a very non-correlated sector compared to the broader markets, both stateside and up here in Canada. Is this a sector you're looking at? And then with West Fraser, it had several steps along the way over the last year where the points of resistance. But I was wondering, is there any one point of support or resistance you would favor over others? Would you look at the volume by price charts, the volume by price study that you get from some charts? I want to get your on West Fraser Group and timber.
Okay. All right. Thanks for your question. So lots to go over there. We got the chart up right now, so we'll start with the chart and just what you think of West Fraser to begin with, and then you want to talk about the sector?
The question was great because he's speaking my language. He's obviously studied technical analysis. I don't need to tell you it broke down. But it is, remember my little rule of we start looking for those peaks and troughs making some progression. And that obviously is the case. And then it did a little bit of a, kind of a base, and then it broke out. So it does look pretty good. And to the viewer's point, it's non-correlated. The market's obviously.
Yeah.
It's not making new highs anywhere near it. So I think, it's coming into a level right now. Excuse me, that might be around $100. And if it can break that, then honestly, there's a lot of points we could say, well, maybe old buyers, see, somebody bought here, and so they're going to want their money back maybe. So you're going to have to take those people out for a fundamental reason. So that's how fundamentals and technicals work together. But, that would be one point. And then ultimately, probably somewhere in here, because you can see there was, a point of resistance and a point of support and another point of support that all kind of lined up. So that might be around 120. These lines are rough. I'm drawing with a crayon on a line chart, but it sort of looks like it's on a good journey. You might find some resistance right around now because it's only a couple bucks away from an old point. But if it can break that, then it's got lots of clean air ahead of it. So.
Okay, and just the sector as a whole, I mean, I'm not sure whether you can speak to the second part of Tyler's question, like whether that's a good place to be. You say you don't want to be in tech.
Yeah, well, I mean, we own a lot of materials, which includes this kind of stuff. We've been focusing on base metals, things like that. But maybe, actually, if we want to pull it up, look at the sector TMBR, I think it's an ETF in the U.S.
TMBR?
I think that's what it is. It's like timber.
Right,
so
yeah.
the ETF ticker sounds like timber.
Yeah.
I think it's TMBR. And, okay, we don't have it. But I could take a look at the sector. It's the only way I can look at the broad sector right now. At this point, we don't own any timber stocks.
Got it. Okay, we're going to take another quick break right now. We'll be back, though, with Keith Richards of ValueTrend Wealth Management, taking more of your questions on technical analysis right after this. Stay with us. Hi there, welcome back to Market Call. We've got Keith Richards on the show today answering some of your questions. We're going to go right to the phone lines. We've got John calling in from Grand Prairie, Alberta with a question. Hi, John, what's your question?
My question on Algonquin Power. The price is down, dividends are lower, the debt's up. Is that buy, sell, or hold?
All right, thanks, John. Algonquin Power, looking at this chart, what are your thoughts?
Well, it is one of the weaker positions within. When we look at utilities are actually doing okay in Canada, but this is a choppy chart. There's another one gapping on it, but trades sort of like this one. It's got some resistance that goes back to late 23, early 24. It's had a hard time breaking. It temporarily broke out, fell below. My thoughts are, I don't know what the dividend is, but typically these have high dividends. My thoughts are that if you are a person just seeking the dividend and you don't mind the fact that it's probably going to be moving up and down between sort of this support level and resistance level, you just live with it and collect the dividend. It doesn't look in danger of moving way down here somewhere. So, but if you're kind of after the capital gain side, it may return to the bottom of the range. Is what I'm saying. Mm-hmm. But I'm thinking if you're kind of just collecting the dividend, depends on your objectives. There's no black and white answer here. So.
Of course. Okay, back to the phone lines we go. Dennis is calling in from Victoria, BC with a question. Hi, Dennis.
Hi there. Hi, Keith. I'm a follower of your blog. Just want to thank you for that. And can I have your views on Agnico Eagle Mines, please? And gold as an investment in general. Thank you.
Okay, thank you. Agnico Eagle. Wow, yeah, look at that chart over the last 3 years.
Yeah, well, again, I mentioned we like materials. We pared back on some of our gold back in March. If you follow my blog, you'll know I did that because I always talk to everybody about what we're doing. So all of the materials are consolidating. Like they moved up, and now they're all kind of doing this. The trick is that, they all look a little different. AEM is maybe been one that's been hit a little bit harder. But generally speaking, if we kind of look, it got parabolic. So that's our first clue, is that when you're following a trend line and it arcs off of the trend line aggressively, you expect it to pull back. Like it's almost a given, right? Which is one of the reasons we did sell some of our gold, not all of it, back in March. But it's on the trend line. And so I feel that, there's your significant last low, which is still maybe a little lower than it is right now. It does it does show signs of maybe stopping the velocity to the downside after the velocity to the upside. So my thoughts are, this is probably an okay play if you're patient and wait for it to prove it wants to bounce off the trend line and maybe even add to your position.
Are there other companies within this that you prefer over Agnico Eagle, or as you say, you like?
Well, we own Barrick. It has a slightly different pattern, so it's been maybe not as weak as some of the others.
Yeah.
But we also own the sector, like through an ETF, and the sector looks like this. Oh God, it looks like a coil. So we call that a triangle, and that formation is actually a good thing because it goes from a high volatility to a low volatility, and usually, not always, usually breaks out to the upside. So that's what we're expecting eventually with gold and even general metals. So you can see with Barrick, it's had its bounce, so it's a little bit stronger, but they're all kind of like that triangle that I was talking about. So we reduced our position, but we still have a position because we have faith that gold is going to find another leg in a few months, we think.
Okay. Back to the phone lines. Claude is calling in from Blue Mountain, Ontario, with a question. Hi, Claude.
Hello. Thanks for taking my call. I've owned a position in Shopify for a long time, and I'd like to get Keith's opinion on this stock as sell or hold based on its performance lately. Thank you.
Okay, thank you.
All right. Well, Collingwood people, I'm from Barrie, so we're almost neighbors. So Shopify is one of the Canadian tech stocks that we don't like. So Craig and I looked at the 10 top names, and we said 7 out of 10 we like, which means the sector looks pretty good. This is one of the ones we don't. So it fell, which a lot of them did, but it based, but looks kind of like it's breaking from its base. If we look closely, actually, this time I'm going to ask for maybe a 1 year, 2 year chart, something like that, because we can take a look at what's happening. And what you will see is Shopify isn't doing what I want to see. I don't mind stocks that have fallen. In fact, I quite like them when they base out for a while. But if they don't find that recovery, start to find, a move up, I'm less interested. So
okay.
I guess
we don't have the 1 year chart,
but but that's what you would see is
okay.
You would see that breakdown is maybe happening from the base.
Yeah.
So as far as I'm concerned, I'd rather buy another stock in the sector.
Okay. All right, back to the phone lines. We've got Yvonne calling in from Sherwood Park, Alberta, with a question. Hi there. What's your question?
Thanks for taking my call. I'm interested in Gildan Activewear. It's taken quite a plunge this morning, so I wanted to know what was happening. I'll hang up and listen to your call. Thank you.
Yeah, Gildan down at one point, about 24%. We've got the chart there. Thanks for your question.
So it's I hate to break it to you, but it's a bad-looking chart.
Just because of the run-up?
It had a nice trend. Okay, so you see these bounces off the trend line. I use moving averages a lot, and you would have probably seen a bounce off of one of the more significant MAs. It's broken. Like going back to basics, low, high, high, low. That's all good. And then all of a sudden, the last low gets taken out. And that means now you have a lower high and a lower low. And in technical analysis terms, that implies that this could be the beginning of a new downtrend. There's no absolutes, but it's pretty likely. Now, it could find support, like this is an old support level, closer to 60. So you have to keep an eye on that. But I wouldn't be buying it, that's for sure. If I owned it, I'd maybe see if it can find the bounce at 60, I'd probably even try to sell into that.
Okay, we're going to take another quick break right now. When we return, we'll take a look at some of Keith's past picks. That's next. Stay with us. Welcome back. Time now for Keith's past picks. So these are from March 3rd, 2026. So just earlier this year. The first one, Brookfield Infrastructure. When it was recommended, it was at $53.71. Now it's at $53.40. So total return of 1%. You say you sold this one.
We sold it, yeah, and not long ago. I mean, I don't like to say we're not impatient, but we but we want to, our job is to try to pick the best racehorses, and if we don't see we're in one, then we sell. So we thought it was trying to break out. It didn't. And so we said, okay, goodbye. So that's the story on that.
Even after, like, look at that. The 1 year chart is just so volatile. So you don't wait to see, like, okay, maybe it could have more of a run.
We moved into another stock, which is going to come up on my top picks. So
Okay.
you'll see what we sold and bought.
Okay, all right. We'll wait for that then. In the meantime, we'll go to your next past pick. This is Atkins Realis. So recommended at $96.91.
Yeah.
Now it's at $83.11. So this one didn't do as well for you. You sold this one too.
This was less about patience and more about violated one of our hold rules. So we were just talking about a couple stocks that I said, oh, look, it's higher highs, higher lows. Suddenly that changed. We had a couple of viewers that phoned in with stocks like that. So this is one of ours. The trick is that you don't stick around. So, you don't, there's a lot of people will hold and hope, and that's a problem. So, there was support. We broke it, out we went.
So when did you sell
we
this one?
we were selling it like a couple months ago. So, it would have been right in here. We didn't sell as it was hitting support. We sold it as it broke. So it would have been maybe a month ago.
Okay.
And so we took it on the chin on that. We sometimes do. But it's better that than hope. This thing could go back up, but could I put my money into something that's maybe a faster racehorse?
Right.
So.
All right, your last one is looking a little more positive. So this is Archer Daniels Midland. So recommended at $67.99. Now it's at $77.92. So total return of 15%. Did you sell this one, or are you holding this one still?
No, we still have this. So it's still doing what we want it to do. So we're very disciplined. I've been doing this for almost 40 years. So we kind of, we just follow our structure as best we can. So, this was a good series of ledges that it was climbing and after it came off of a bottom. And it's just in one of those ledges right now. Typically, these things will go and then break out. So we're hoping that this little ledge breaks out. Our target is, if we looked at a longer term chart, you would see that it had an old high of around 87. And that's where we're hoping to get close to. And so that's still, from current prices, almost 10% ahead. So we're holding.
So what makes you think that you might get close to that previous high point? Is it just the direction that it's moving in right now?
Well, the chart suggests that there's still some momentum on its side. But also it is we like materials. We like commodities. Right. So it's the anti-AI movement. Like, not that we're against AI, but it's just right now it's gone too much. So, some of these stocks, they focus. For example, we own nat gas and stuff like that. So they're going to benefit by AI, but they're not hyped up. So we're trying to, critical minerals, stuff like that. We're buying things like that will still benefit. But, when we see stocks at 80 and 100 times earnings, we're like, okay,
Stay away from that kind of thing.
That's why we're doing what we're doing.
Okay. All right. So those are the past picks. We're going to take another quick break. We'll be back, though, with Keith Richards of ValueTrend Wealth Management, taking your questions on technical analysis right after this. Stay with us. Welcome back to Market Call. Keith is here answering your questions. We're going to go right to the phone lines. Kevin is calling in from Ancaster, Ontario with the question. Hi, Kevin.
Hello. Hi, Keith. Can you please give me your analysis on Boston Scientific as a medium-term hold? Thank you.
Okay, thank you. We got the 3-year chart out for Boston Scientific now. What are your thoughts?
Yeah. What do you think my thoughts are?
Yeah.
Uptrend broke, there's your famous, neckline and lower highs and lows and all that stuff. The question now, probably Kevin is more concerned with is it going to find a bottom? And it could, but I'm looking, so this is only a 3-year chart, and we could maybe do a longer chart, but that low, which is, I don't know what it was, but that's probably around 50, looks to be taken out.
Do we have a 5-year chart of Boston Scientific, I wonder? I think we'll get that for you.
Sure, yeah.
Yeah.
Okay. So we can find old points. This is what I try to do when I'm trying to find one of these like down and out stocks. So yeah, this was, I guess, our $50 point that we were just talking about. So it's kind of broken that. It's early yet. It may find a breath of air and move up. But the next point might be, so this kind of support and resistance. So this was support here, and this was resistance, this was resistance, this was support. So it could, like, stocks can find, actually doesn't fall too far apart from the old support point, but we may be coming into an old support level. It's really hard to tell. When I get in front of my good charts, I see all the bars and I look at volume pattern stuff. But I would say that there's a potential, but I personally would not buy this stock right now. I would not hold my breath waiting.
Not much of a potential for it to go back up to where it was
Yeah, I want to
in
see proof.
2025.
Now, I'm not saying
Right.
it won't happen because there is a potential for support, but it happened quite a few years ago, and it's sort of iffy if it's finding that support right now.
All right, we've got another caller. Rob is calling in from Calgary with a question. Hi, Rob. What's your question?
Hi, thanks for taking my call. I have a fairly large position in secure waste infrastructure, which is being taken over by GFL Environmental. And since the announcement in April, GFL's shares have fallen by, 7 to 8%. I'd like to hear Keith's opinion on GFL's chart, as I'll be forced to convert my secure shares into GSL shares and debating if I should sell my secure shares before the deal closes. Thanks again, and have a good afternoon.
Okay, thanks, Rob. You too. GFL Environmental, we've got the chart up there.
Yeah, so it did move down.
Let's see, yeah.
There seems to be a lot of these today.
Yeah.
So, up, then down. So this is probably, proof that it might just find support because you can see the bounce. And that's so far good news on the name, on the stock. So I would say that maybe give it a shot, give it a chance and see if it can actually, it may be one of these guys, where it bounces and falls and bounces and falls. So you have to be careful of that. It could be one of those. It can head fake you, right? But if it does, because it was at an old support level, that it's bouncing, it may be showing proof that it's going to survive.
Have you ever noticed any trends when there's like a takeover like this, that sometimes the stock falls a bit while investors are feeling a little cautious about such a big change, and then it bounces back
It can
up?
happen for sure. Yeah. I've seen that with some of the banks, like Laurentian a while ago and stuff like that. But depends on the offer too.
For sure.
If they're bought out at a higher price too.
Yeah.
So.
Okay, we've got a email question. I think this is from Irving, and yes, it is an email question. It reads, I did well with Element Fleet Management, the ticker EFN, selling on its way down. We now see a slight uptick in the stock. Should I buy now or wait for more upside? Okay, Element Fleet Management. There's a 3-year chart.
It's another one of those ones, right? So, uptrend ended, downtrend began. So we can see that that might be support. So again, it's a maybe. The bigger picture is lower highs, lower lows, right? But old support is important. And the reason it's important is that people will remember that price range and remember how it went up. Like, it's all about memory. And so there's a decent enough chance that this current downtrend, which is absolutely a downtrend, it's indisputable, lower highs and lower lows, but it's a decent chance that it could find support. What I would do is, often what I find is when you're in a downtrend, it starts to base, and that means it'll actually stop making lower highs and lower lows, and it just kind of moves sideways for a while. And then when it breaks out, that's when you make your move. It's not making a guess that it's going to change direction. It's letting it change direction and buying a little bit higher. So that's the way I would play this.
Okay. We've got Susie calling in from Toronto now with a question. Hi, Susie. What's your question?
Hi there. Based on their current or their trends and the current environment, would you recommend a hold or sell for Baytex?
Okay. Thank you for that, Baytex. You said you like commodities right now.
We like energy, and I know that the Iran war is supposedly over, and they're going to. But so this is I wrote a blog on this. I write a lot of blogs, and I encourage people to subscribe. It's free. You can just go on the site. You don't have to subscribe if you don't want. But I talked about oil and gas, and the big theme we're looking at from a fundamental point of view, so that's Craig, that's less me, but we work together. And the idea is that just because they crack a deal, and just because they open up the Strait again, it's sort of like, well, okay, there's a big backlog, there was a lot of destruction, okay, they have to rebuild that just to get the producing side online. They have to look after that backlog. There's a whole bunch of what's called strategic petroleum reserve tanks that have to be refilled all over the world. Okay, so this stuff is going to take time, and that's going to keep oil, we think, give or take 80-ish bucks for, goes down to 75, fine. If it goes to 85, fine. But that's probably an area it'll stay, okay? And think of it, just 6 months ago, WTIC was trading at 60 bucks. So if they could make money at 60, the producers, that is, they can make money at 80. So you got to think, right? That's higher. That's 30% higher, right? Yeah. So this is our belief is that, yes, the news is going to drive oil down. It's going to drive tech stocks even more overbought. But that's kind of short-sighted. Longer term, we think in the next 6 months, oil producers are going to be making money hand over fist. And it's another reason why I don't mind the Canadian side, even though the Canadian side have all these carbon capture taxes and stuff, which is giving them a disadvantage to some perspective to other producers in the world. But still, we're still going to make lots of money. Right. So I feel that just don't worry about it.
It's easy to lose perspective, right? When you see the prices going up and down. Yeah, so if we take a look at Baytex quickly.
Yeah, this is, it's there's the old high from way back in 23. Maybe it'll find support here. We're seeing this on all the oil producers. They're all kind of pulling back a bit, but we don't see any real reason to sell just yet. I mean, yeah, the uptrend may be in question, but I would say that I'm guessing here, but just based on the fundamentals I just noted, and I wrote a blog on all the fundamentals recently, but it wouldn't surprise me if it sort of found support in this general area, all the producers.
Okay. So. All right, we're going to take another quick break right now. We'll be back, though, with Keith Richards of ValueTrend Wealth Management, taking more of your questions on technical analysis right after this. Stay with us. Welcome back to Market Call. We've got Keith here answering your questions. We're going to go right to the phone lines. Mike is calling in from Markham, Ontario with a question. Hi, Mike. What's your question?
Hey, Keith, and how you guys doing? My question is Microsoft. I'm really enjoying your technical analysis, Keith, and talking about the higher highs and lower lows, and specifically as it relates to Microsoft, the building of a base. Although, as I look at the last little bit, that base that it built around 360, 70 didn't sort of work out. So just give me your thoughts on that.
Okay. Thanks, Mike, for that question. Yep. The 3-year chart of Microsoft.
Yeah. So you may be interested in knowing that we have it on our watch list, but we don't own it. So this is funny because we were talking about how I hate tech, but it's really, but if we look at
American tech,
but what it's been is the SOX, the semis more, and NVIDIA and all that. It's even the mag stocks. A lot of them are not doing so great. If you look at the MAGS ETF, they've rounded over really, to some extent, anyways. And Microsoft has been, one that's been punished to next level punishment. But this is a company that's been around a long time. Like Craig and I have traded this before, and we like this stock. We just don't own it. To your point, somewhere near 360 may be support. If it bounced off and then it looks like it's coming back down again.
Yeah.
But if this bad boy can stay somewhere around the 360-ish area and keep finding support, it's a case for it going back up again. That's why we have it on our watch list. I mean, I would even take my chances if it successfully bounces again, because the likelihood is that it's proving that it doesn't. The buyers will come in at 360. I'm not saying it will, but if it breaks, that's a whole different story. I don't want anything to do with it. But this is one of those moments. It could be an opportunity, but I'm in waiting mode.
Yes. And a big reason, I know you're not here to talk about this side of it, but that maybe we're seeing these big companies going down is just that massive spending they have right now, right?
Yeah.
So just waiting for that
That's
to level out.
Craig's the CFA.
Yes,
So he was explaining all that to me, and I kind of go, yeah, whatever.
Yeah, you just want to look at the charts. Okay, we'll move on then. We've got lots of callers. So Red's calling in from Forest, Ontario with a question. Hi, Red. What's your question?
Yeah, it's OpenText, and since February, it looks like it bottomed out into a channel pattern, but now it looks more like an inverse head and shoulders. So I'm just curious.
Okay, thanks, Red, for that and the description. Okay, yeah, OpenText, we've got the chart. You like Canadian tech, but what do you think about this?
Remember we mentioned at the break that there's only 3 stocks in the Canadian tech that I don't like. So far, this is the second of the 3 that have been asked about, Shopify and then OpenText. So I don't like this, but it doesn't mean I don't like the Canadian tech sector. That's why. I mean, there's the line, it's breaking down. Now, maybe remember, there's no absolutes. This is just opinions with a bit of an edge, I like to say, right? That's why we follow rules, because we don't really know what's going to happen. We just follow our rules. So maybe there's a base being built, but the problem is it cracks some pretty important support, and it was, so I would give it less chance of it breaking out of that base, but there's always a definite maybe that it will. So,
right.
A definite maybe.
Okay, and maybe we'll get asked about the third one you don't like today before the end of the show. We'll have to see. We've got a viewer question coming in from Josh now. This is an email, and it reads, technical analysis on Tourmaline, please. Okay, let's take a look at Tourmaline. I'm not sure. You like commodities. You said you like oil and gas.
We like oil and gas, and this is they're both oil and gas, but it's gassy.
Yeah.
Much like we do after burritos, right? So we own the stock, and it's a sideways mover. So buy at the bottom part, and if you want, sell at the top. We're probably inclined to look at around $70 to sell it. But if there's reason enough that it goes through that, then Craig and I have to do. Sometimes Craig and I butt heads because I'm going sell, and he'll maybe say no, it's got So, but the chart tells me that if you were buying anywhere around the 60-ish or maybe a little bit under, which is where we've been picking it up. We try to pick it up when it gets down to that level. I think we've done 2 legs so far. It hasn't done anything, but it's not hurting us. You're on a bit of a dividend, and we think it will probably hit 70 anyways, or close to it, very close to 70.
Okay, we've got another email question, this one coming in from Emil, and it says, can I ask your technical opinion on Cameco? All right, we'll take a look at Cameco. Thoughts on the company? Do you like this one?
Well, we've owned this for quite some time.
Still do?
We bought it on this breakout here, and now it's consolidating. But if you look at this pattern, it is higher highs, higher lows. Now it's consolidating. But in an uptrend, you do get. There was a stock we were looking at a few viewers ago that asked a question. I said, "Oh, look at it's doing this nice. It consolidates, it breaks out. It consolidates, it breaks out." So that's what we see Cameco doing. Craig likes it fundamentally because he thinks there's a huge need for uranium. A lot of power is going to be switched over. I think it's something like, I may be wrong, but I think it's 35 or 40% of all power in North America is generated through nat gas. So, we could be heading towards more and more uranium usage as we built out nuclear, right? So that's the fundamental thematic stuff. I just look at the charts, but I'm just saying I don't mind the fact that it's pulled back a bit. Craig asked me, what do you think the other day that it's pulled back? And I said, hasn't broken its last low. I'm not going to worry about it. We'll see. If it breaks, then we have to change our mind. But at this point, I'm still with the story. So I don't mind it.
All right. Yeah. Okay, we're going to take another quick break right now. When we return, though, we'll take a look at some of Keith's new top picks. Stay with us. Join us tomorrow on Market Call. John Zechner will be on the show. He is chairman and founder at J. Zechner Associates, and he'll be taking your questions on North American large cap stocks. And if you miss Market Call, you can always check out our daily podcast. You can find it on iHeartRadio and other platforms, and you can also watch full episodes on our YouTube channel. And time now for Keith's top picks. So we'll go through these. The first one is Berkshire Hathaway. What is it that you like about this company?
Well, Berkshire's it's funny when you say this company, it's just almost like a fund, right? It holds everything in the world. Well, not to say that, because in truth, we like the sectors that it's in, and we like the fact that after Warren Buffett said a year ago, I'm out of here, and the market kind of punished it. There was a Warren premium built into it before, and then it kind of, ended 2025. He was saying, okay, this is my last day. And then it kind of fell on there. Everybody was worried, but what's his name? Greg Abel?
Greg Abel, yeah.
Might not be able to do it. But I mean, he's basically following the program, right? And so there's still true deep value. They've got lots of cash. They got rails. They got insurance. They're well diversified in stuff that's been overlooked, and we're sort of, I mean, they've still got Apple, and they bought a pretty big position in. Sorry, I'm gapping right now.
Mm-hmm. They sound like they're quite diversified.
Yeah, they're very diversified, and we like the pattern. Oh, so we should go back to that chart because
we'll go back to it.
Yeah, we skipped ahead here. So this is the pattern. So we just bought it right here. Like we see the pattern. This is obvious support. Like it doesn't get much more. When you hit once or twice, you go, maybe that's support. But when it hits over and over, buyers are picking that stock up, right? So we said, really, what's the downside? If it cracks this, we will sell, right? Mm-hmm. That's what we do. I showed you on our earlier picks that I will sell. I have, we have to be rather robotic at times. But this, as expected, is bouncing off. So we're already in a profit position. Yes, it'll probably run into some resistance, but we feel there's maybe potential for it to break through, but we don't predict, we just prepare. And if it doesn't, we'll just sell it and make a few bucks on it. But if it breaks through, this could be a great position.
And was it just some hesitancy maybe from investors just watching to see Warren Buffett's replacement, able to see how he manages things?
Plus, everything's been about AI.
Of course.
I mean, that's part of the problem is that, it's been all about one sector, and talked about my performance charts.
Yeah.
When I looked at everything else except for tech, it all looks terrible. And you got to see this video I did because it really shows, like, graphically the charts that I put up. So, we think this is the anti-AI trade.
Okay. All right. Next up is CP Kansas City Rail. What is it that you like about CP?
Well, it just broke out. So again, we were just talking about like with Berkshire, right? Mm-hmm. So Berkshire was going sideways and bounce and bounce and bounce. Well, this has been doing that, and it had a lid, right? You can see the lid. I mean, even people that are not technically orientated can probably. I used to get my son. He's now in his 30s, but when he was like 10, I could get him to do better technical analysis than. Because I go, where is it stopping, right? And he would go, here. So that's what I say. I wonder how I get paid on this sometimes, but. It broke out. Like that's all a technical person needs to see is a breakout means that something's changed. Okay, there's new interest in the stock. I go talk to Craig, the CFA. He goes, yeah, here's the reason. And I go, okay. So we need a what and a why. The what is the breakout. The why is why it's breaking out. And here we go.
Okay, and last up is Peyto Exploration. You say you've owned this one for quite a while.
Yeah.
Which is how long?
I was just saying, I joke around. Like quite a while for us is 2 years. Like, whoa, that's forever. But I mean, we lose patience. But it is pulling back. So we've owned it since maybe even late 23. It's been in an uptrend. It arced off. It got overbought. Theoretically, when things get overbought, sometimes we will just take our profits. We didn't because we like the overall oil and gas theme. Based on the straight, on and on and on, and their usage. So it may kind of meet the trend line. It may sell off a little bit more. But what I'm saying today is that if you can buy it coming close to this trend line, it's a really well-run company. And it's probably best in shows, like they say for dog shows. So it's one of the better names. So I think it's getting to an opportunistic part where I think viewers who don't own it could consider it.
And it's kind of like we were talking about earlier, where if it does fall, if the strait reopens anytime soon, it's still not going to be a big change.
If you got oil prices higher than they were in January, they're going to make profit.
Of course.
So that's all we need to know.
That's all you need to know. Okay, we will leave it there. Keith, appreciate you coming in. Thanks so much.
Good to be here.
And thank you for watching Market Call. We will see you next time.